Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Tuesday, November 17th, 2015. So last week I had left you with that it would make a little more sense if we saw some more weakness in the market, and my main reason was this is when I had put it out. This is the 11th, and I just said it would have made a little more sense if they would have come down to the at least a 23% retracement, because it was right here, and it ended up going through it and then went through this support and went down to the 38% retracement level. So it did go down. We got some extreme bearish sentiment readings, and we sent that out as a free update on Friday as well as Monday, and you can see what happened from there. But let's go through our normal process, and I'll go through those stuff a little bit later. At Sentiment Timing, we believe that human beings in the markets are irrational, and there's always an irrational element at work in the markets, and that is what creates market opportunities. Now, the way we monitor and try to pick up on these irrationalities in the market is through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators. So the timing indicators, they are what gives us a when to expect the reversals, and they're you don't get anchored to these dates, but they've been spot on often. But what it does, it gives you an idea as far as if we're heading into one of these technical turn dates. Is it safe to be buying if we're heading up there and it's looking lower? And when we see, when we know a date is coming, we want to match up how sentiment is, because, how people are feeling about the current trend. If everybody's on the bull side, again, it's giving more weight to that turn. And then from there, we just use our technical analysis to determine where price might reverse. So to give you an example of how this all works, and this is just your regular sentiment cycle. And just when we had the lows off of the late September lows, that was your capitulation. That was your, when everybody was depressed. And it quickly went from that level all the way up to the euphoria. And we know it was in the depression levels here as well as the euphoria by looking at what the actual sentiment data was. So, yeah, it's very easy just to have these things labeled on here, but how do you actually know that, what phase of the cycle we are in? And that's what the sentiment does. It tells us how people are feeling about the current trend. So this off the lows, you can see people were bearish, we got a bounce. Everybody got bullish. This is the exact date. That was the technical turn date that on September 17th that was put out, and I believe that's in the free report. You can see we had a 91% bullish reading, and it ran right into a moving average. And from there, we saw the S&P drop another 150 points. Now, we had the 94% bullish reading just as we were going into the kill zone, which was projected 3 weeks before, almost to the date. So all of these, sentiment it played a big part of it, but it was also the actual technical dates that were there that gave us, you did not want to buy here because we were anticipating a top to come, and we had high sentiment readings, and you saw what happened. But you didn't want to be shorting down here because everybody was bearish, and from there we got a big bounce. And once everybody believed in that, the lows were in, we got a 91% bullish reading, and it was right on a technical turn date, and we dropped back down again to make a 1% where everybody was bearish, and from there we started rallying. Now, this definitely went a little longer than I was expecting. You can see we had a series of bullish readings, but once we got here, that was it. Everybody was looking at 2150. Not many were looking down, and we had a big drop. And this is where we started seeing the 3% and 1% bullish readings, meaning that everybody is bearish on the markets. So again, do you want to be, do you want to be shorting when we're getting into this cycle here that's turning up? And everybody was, and people still aren't believing what's going on right now. Now, we may come down and test the lows. We'll figure that out with the on the technical analysis side of things. But right now, we know when to expect the next turn. That's been given for the last week, so we know when to expect it. We know sentiment was low, so it has room. Obviously, what I'm talking about is it's going to be moving higher into that turn date. But the thing is, you can't get married to that because we have negative turn dates that are coming, not far after that. So things are going to get, a lot of people think they have it figured out with the Santa Claus rally that they were calling from here and why we're going to 2300. Now there is no Santa Claus. Everyone's just following what they're reacting to what the market is doing, and sentiment is leading. It's telling you whether it's safe or not to be, buying into this rally right here. Even though it went higher, it was not safe, and we saw them give back a big chunk of it real quick. Now down here, it was not safe to be, shorting because everybody was bearish. So that's really the way this whole system works. And if we take a look at the regular at our regular charts from the technical analysis end of it, this is where everybody got bearish on the market. So everybody was bullish here. We broke through this little triangle here, and this is where I said lower would make more sense. Everybody got bearish, and look what it did. It went right to the 38% retracement. This support line has been there forever, and we had a big bounce. Now, where did we bounce to? Right into some resistance, but it still makes sense for more room to the upside. Now, can we pull back a little bit more? Absolutely, but just looking at the wave counts, 1, 2, 3, 4, and wave 5 could take us up to the 2080 area, possibly higher. Now, they may extend wave 4 a little bit lower, but the thing is, we know when to expect this rally to go to. So whether they come down and up or they go up from there, that doesn't matter. We know when to expect the top to come into place, and then we also know when to expect weakness. And that's why I'm saying knowing these things ahead of time gives you an advantage over every trader that's out there, and knowing how everybody is feeling about the markets gives you a very good clue as far as which direction to be looking. So things have been, we were definitely looking for this rally. Right now, this move off of the low sentiment, it happened. So whether this 4 extends lower or we go up, then we're going to leave that up to the markets. We're going to know when to be able to start looking on the short side. But right now, things look like they if they want, they could head higher. If they want to pull back a little bit, that would make sense as well, but I wouldn't be aggressive on the short side and anticipate some kind of move to the upside. So with that, that's about all I have for tonight. If you guys are interested, we put the 50% discount for the first month on. We put it out yesterday. I think we got 5 people that subscribed, so there's 5 left. Again, it's trading with confidence, with a secret type of trading that not many people in the world have, and you have somebody that has been in these markets for over 40 years, steering the ship. And if you take us on, I am giving a free membership to Markets Path. I do nightly video reports like this, morning notes, email alerts, that what I'm doing, and we also have a trade room. So again, first 5 people that subscribe, they will get the 50% off. If not, you just have to go at our regular rate. And until next week, have a great night.